Welcome to the lesson that relates to cash conversion cycle. While understanding cash flow statements, we saw that there is almost always time lapse between you taking product from the supplier and then making him or her the payment. Similarly, there's always a time lapse between you supplying the product to customer and then taking money from them. Let us now look a bit further into this aspect of the business. Before going into that, there's one concept, working capital, that is defined as difference between current assets and current liabilities. This working capital is very important to know the day-to-day health of a business. So if current assets, that is cash in hand and money in bank, is more than current liabilities, that is the immediate money needs of the company, then company will run in a healthy manner. So is it always that the company is supposed to have more current assets than the current liabilities? Probably yes, but need not be always. We will look when there is an exception to this rule, but before doing that, let me explain you how the affair of purchasing and sales affect the company. So, imagine that you have made purchase of raw material to run your company. After making the purchase, you take some time to make payment to the supplier. This duration, days payable outstanding, say 10 days in our case, is the duration between which you make the payment to supplier and you receive the raw material from him or her. After taking the raw material, you take some time to convert it into finished products and to dispatch it to the customer. This duration, say 30 days in our case, is called as inventory period. After dispatching the product, the customer to whom you have dispatched the product takes some time to make payment to you. This duration between supplying of the product and receiving payment from the customer is called as days of sales outstanding, say 15 days in our case. Now come here. You need money to pay to your supplier at this point of time, but your customer is going to pay you money at this point of time. That is 30 plus 15, 45 days minus 10 days, that is 35 days. During these 35 days, your company needs its own cash to run its affairs. Otherwise, it will be in trouble. So, I hope this diagram has explained you the importance of the cash conversion cycle and the duration during which the working capital works as a cushion to run the company's affairs. Now let us look a case in which the cash conversion cycle does not exist. This case is that of, say, an online retailer. What happens in the case of an online retailer? Suppose you are an online retailer, your customers surfs your website and then places an order and makes payment. Right, that indicates that days of sales outstanding is 0. That is no wait for payment from the customer. Inventory period, say 5 days, that is during these days only the online retailer is responsible for the particular product, for the particular inventory. And does the online retailer makes payment to its supplier immediately? In most of the cases, no. It has a fixed duration, say in our case 10 days before it makes payment to the supplier. So in this case, you can see that the duration in which own cash is needed to run the affairs of sales and purchase almost nil. That is, in this particular business model, the firm does not need any of its own cash. Rather, it will have cash from its customer at this point itself, and it makes payment to the supplier at this point, and during all this duration, the cash remains with the online retailer, and hopefully it can generate some interest through that money. And here you are supposed to look deeper. In this particular case, days payable outstanding, that is, it's a liability. Though this is a liability, but still the company is happily able to run its affairs on someone else's money. So you should not always feel that having more assets than liabilities is important. In this particular business case, we can see that having more liability than asset has helped the company to run its business very comfortably. Thank you.